Hello everyone, my name is Nitin Nahar. In this video, we are going to discuss the amendments which have happened for Inter CA November 2023 exams. That means this video is going to cover amendments which have taken place from 1st November 2022 to 30th April 2023. Now, if you see the ICAI statutory update for Inter CA, that statutory update by ICAI covers amendments from 1st May 22 to 30th April 23. That means the statutory update book by institute covers amendment for full 1 year. There were lot of amendments which have happened in May 23 examination. That was already covered by a separate amendment video that is already there available with you. So you are not required to go through those amendments. We are only focusing on amendments which have taken place post 31st October 2022, that is 1st November 22 to 30th April 22. 6 months amendments will be covered in this video. Now, what I request you to do is you can take a printout of this particular PDF so that while I am writing, you can also make some notes in this particular PDF. Let's go ahead and see the changes. The first one relating to compensation cess. Basically, compensation cess was applicable till 30th June 2022. Which has been extended till 31st March 26. I have kept this here because this is the first thing in your statutory update, though this amendment was already applicable for May 23 exams. Then, the second important change which has happened is in RCM. Now, Section 9(3) of CGST Act and Section 5(3) of IGST Act gives a power to government to notify services or goods on which recipient will pay the tax under reverse charge mechanism. We had learnt all the services where 9(3) or 5(3) is applicable. Now what is the change? Wherever central government or state government is written, it will include court or tribunal. That means government to business entity. Business entity was responsible to pay the tax. Renting of immobile property by government to a registered person. Registered person was required to pay the tax. In such cases, now that government would also cover court or tribunal. To give you an example, say suppose this is a court premise. Now whatever court is charging as court fee, that is already covered by negative list. There is no GST applicable on that. No one would pay GST on court fee because court fee is already covered by negative list. Same way, tribunal fee is also covered by negative list. But say suppose here there is a bank ATM. Now, this bank ATM which is there within the court premise, bank will pay rent to the court. So court is the supplier and bank is the recipient. Now the question is, on this transaction, who would be responsible to pay the tax? Because there is no exemption. The exemption or the entry of negative list does not cover anything which is provided by court or tribunal. It covers only fee charged by court or tribunal, basically court fee. What about this rental? Now government has said that this will be covered under RCM. Bank will be responsible to pay the tax. Because say suppose this was a government premise and bank had taken into rent. Then in that case, bank had to pay under RCM because renting of immobile property provided by government or local authority to a registered person has to pay the tax. In this case, now that the entry is widened to cover court or tribunal as well, court or tribunal will not be required to pay tax in this case. the business entity or registered person will be responsible to pay the tax depending on the type of service. Let's see. In the RCM notification, an explanation is inserted that all the provisions in RCM notification where central government, state government is mentioned shall apply to parliament, state legislature, court and tribunals. Okay. Then the next is exemptions with regard to residential property, exemption with regard to access to a road or bridge, and education related. These three, there have been some minor changes. The first one is related to education. Let me give you a background of that. When we talk about education sector, what do we already know? An educational institute providing conduct of entrance exam enjoys the exemption. We know this. Education institute providing conduct of entrance exam enjoys the exemption. Now the question was, what if someone other than education institute like National Testing Agency, which is set up by government for CET exams and other entrance exams, now whether they will also enjoy an exemption? An explanation has been inserted that National Testing Agency will be regarded as an education institute for limited purpose of conduct of entrance exam, not for all purposes, only for limited purpose of conduct of entrance exam they will be regarded as education institute. That means any authority, any board set up by government including National Testing Agency, if they are providing entrance exam service, then it will enjoy a exemption. And what is this entrance exam for? For admission to a education institute. Let's have a look at it. An explanation is inserted in the exemption notification to clarify that any authority, board or body set up by central government, state government, including National Testing Agency, for conduct of entrance exam. Let's have a look at this explanation. Education related. An explanation is inserted in the exemption notification to clarify that any authority, board or body set up by government, including National Testing Agency, for conduct of entrance exam for admission to a education institute shall be education institute for limited purpose of conduct of entrance exam. So for the limited purpose of conduct of entrance exam, they will be regarded as a education institute. Okay. Then there used to be an exemption for service by way of access to a road or bridge by way of toll charges or annuity. Annuity was part payments which were received by government, by the person who has operating the toll plaza. Now that annuity was creating a lot of confusion whether that annuity is for construction of road or for access of road or bridge. That's why, to avoid all those confusions, government has deleted the word annuity and the exemption has been withdrawn. Be very careful. Toll charges even today enjoys an exemption. Only annuity payments, the exemption has been removed. So, access to a road or bridge, toll charges even today enjoys an exemption. Annuity payments have lost the exemption. Let's have a look. Service by way of access to a road or bridge on payment of annuity has been withdrawn. That means annuities have now become taxable. Please mention this. However, the service by way of access to road or bridge on payment of toll charges continues to be exempt. So toll charges exemption is even today existing. Okay. Then the next one is relating to residential dwelling. First, let's see what was the change which happened in May 23 for residential dwelling, because this has some background to that. Let me tell you the taxability of residential dwelling. Now, residential dwelling, basically a residential property, if it is given for commercial use, then the treatment is different. If it is given for residential use, then the treatment is different. Now, if it is given for commercial use to an unregistered person, then it is taxable under forward charge, because he is an unregistered person. It's not under RCM. RCM clearly says residential dwelling to a registered person. If it is given to a registered person, then it is taxable under reverse charge mechanism. Now let's talk about use as residence. If residential property is given for use as residence to an unregistered person, then it is exempt, because twin conditions satisfied. Residential property for residential use enjoys an exemption. But sir, what if it is given to a registered person? If it is given to a registered person, then the law had said taxable under RCM. Now, think about it. Say suppose I am a proprietor of a proprietorship concern and I am a registered person, and I take a house on rent for my own stay in my personal capacity. I am a registered person. I have taken a house on rent for my own stay in my personal capacity. Whether GST should apply on that? Sir, looking at the provision, it says if you are registered person, taxable under RCM. Now that's what government has done. Government had added an explanation saying that if a proprietor takes on rent for his personal use, that is for his personal capacity and not for business purpose, then in that case it will enjoy a exemption. So proprietor taking it for personal use, not for business use, plus it is not the proprietorship concern which is taking on rent. I am taking in my personal capacity for my personal use, then it will enjoy a exemption. But sir, what if you take a house on rent for your employees? If I take a house on rent for my employees, then it will still be taxable under RCM, because this is a benefit only when proprietor is taking for his personal use in his personal capacity. Clear with this? Now, my recommendation would be that you draw this, you pause the video and draw it this particular summary for residential dwelling. Okay. Now let's see the entry. Service by way of renting of residential dwelling for use as residence, except where the residential dwelling is rented to a registered person. This was already there. An explanation as hereunder has been inserted. Let's see the explanation. For the purpose of exemption under this entry shall cover. Shall cover, that means it will enjoy a exemption. It will be exempt. What shall it cover? Let's see. Service by way of renting of residential dwelling to a registered person, where registered person is a proprietor of a proprietorship concern, not allowed for companies, etc., and rents the residential dwelling in his personal capacity. Oh, he is renting it in his personal capacity. for his own residence. Personal capacity for his own residence. And such renting is on his own account and not that of proprietorship concern. In his personal capacity, he is renting out, not by the proprietorship concern. Then exemption will be available. Okay, these were the three changes which happened in exemption. First one is relating to National Testing Agency. They will be regarded as education institute for limited purpose of conduct of examination. Annuity relief has been deleted. Third, proprietor for his own use, personal capacity enjoys a exemption. Okay. Now let's move on to ITC chapter. ITC chapter, you recall there was a point where if you don't pay your supplier, you are the recipient. If you don't pay your supplier within 180 days from the date of invoice, then you have to reverse ITC along with interest at 18% per annum. Now, May 23 exam was the only exam where even if you have made part payment, full reversal was required to be done. Thereafter, the law was amended again, and now it clearly provides that if proportionate amount is paid, then ITC reversal will be only to the extent of amount not paid. Let me give you an example, then we will read the law. Say suppose the bill amount is 100, GST 18, total 118, and I have paid 59 rupees. If I have paid 59 rupees, then the unpaid amount is 59. Now, how much should be the ITC reversal? Should I reverse 18 or should I reverse proportionate if I have not paid within 180 days? Then now the law has clearly provided that it will be proportionate. So 118, 59. So you will have to reverse 9 rupees. How did you get 9, sir? 59 divided by 118 into 18. I will have to reverse 9 rupees, which is for the unpaid amount. So I don't have to reverse entire 18. I have to reverse to the extent amount not paid. Let's have a look at the provision. Proportionate reversal of ITC, where the registered person has paid the amount towards value of supply wholly or partly. This partly has been added. Proportionate reversal of ITC, where the registered person has paid the amount towards value of supply wholly or partly. This partly has been added now. Then he shall pay or reverse amount equal to ITC availed of such supply proportionate to the amount not paid to the supplier along with interest payable under section 50. Interest is 18% per annum from the date of utilizing ITC till the date of ITC reversal. While furnishing return in GSTR 3B for the tax period immediately following the period of 180 days from the date of issue of invoice. So the moment 180 days expires, thereafter the 3B which you are going to file, you please report it and reverse the ITC. Who has to do this? Recipient is required to do this. Okay. Now, the next amendment concerns ITC and returns chapter taken together. See, section 41 basically provides for availment of ITC. Let me give you a background. One of the conditions to avail ITC is supplier has paid the tax to government. Let me give you a recall. Section 16 has 6 conditions to avail ITC. 1. You have received the goods or services. You are in possession of an invoice, debit note or tax payment document. Third, supplier has paid the tax to government. Fourth, you have filed a valid return. Fifth, supplier has furnished the details in GSTR 1 and it is communicated to recipient in GSTR 2B. And last one, ITC is not restricted under section 38. So there are totally 6 conditions. One of the condition is supplier should have paid the tax to government. Now, when we talk about supplier has paid the tax to government, section 41 used to allow ITC on provisional basis earlier. Then the word provisional was deleted and now ITC is availed on self-assessed basis. Self-assessed meaning self-determined. You will determine your ITC and you can take ITC. Now, how do we get to know whether we are taking ITC but my supplier has paid the tax or not? Now government has provided a mechanism for that. Let me take you through this mechanism. See this carefully. I'll create a case. June 2023. Supplier filed GSTR 1. Now, if supplier has correctly filed GSTR 1, then this particular invoice is communicated to recipient in GSTR 2B. So supplier filed GSTR 1, it was communicated to recipient in GSTR 2B. Any problem till here? No, no problem. Obviously, supplier has filed GSTR 1, it was communicated in GSTR 2B of the recipient. Now, supplier did not file GSTR 3B. So, has the government received the tax? No. Because the supplier has not filed GSTR 3B, government would not have got the tax. But even without this, recipient would have claimed ITC in his GSTR 3B. Recipient would have claimed, sir? Yes, because section 41 allows ITC to be claimed on self-assessed basis. If it has been communicated in your GSTR 2B, you don't have to check, or there is no tool to check whether supplier has paid the tax on your invoice. So there was no tool to check. So recipient could take ITC in 3B. Even today recipient can take ITC. But has the government got the tax? No. Government has not got the tax because supplier has not filed his GSTR 3B. Now what will happen, sir? Now there is a timeline mentioned. 30th September 24. Till this time, if supplier has still not filed 3B of June 23. People, please understand that you will keep following up with your supplier because you can check whether supplier has filed his 3B or not. That tool is available online. You can check whether your suppliers have filed 3B or not. Now, the moment you see that your supplier has not filed 3B, you will keep calling him and tell him to file his 3B. But say suppose he has not done it till 30th September 24. People, government is giving good time. From the financial year, this financial year was 23-24. After the end of financial year, 30th September, till 30th September, if supplier has still not filed his 3B, then on or before 30th November 24, recipient has to reverse ITC. And sir, interest? No, interest will not apply if he reverses till 30th November. Thereafter, sir, yeah, if he does not reverse till 30th November 24, then from here interest at 18% per annum. From 1st December, interest will start. This is good, sir. The good part is that the recipient is not required to pay interest for this part because recipient would have claimed ITC here only. but he is not required to reverse along with interest. He can reverse just the ITC component. Interest will apply only from 1st December onwards. Is government giving good time limit? The answer is yes. So please keep checking your suppliers. If supplier has not paid the tax, that is, he has not filed the returns of 3B by 30th September after the financial year, then you have to reverse by 30th November. By 30th November, you will have to reverse ITC. If you don't reverse till 30th November, interest at 18% per annum will start and officer can also recover that money from you. Clear with this? Okay. Now, what if here supplier pays the tax? If after you have reversed, if he pays the tax, then in that case, recipient can re-avail ITC. And please think whether time limit to avail ITC or re-avail ITC. 30th November time limit which is there, is it to avail ITC or re-avail ITC? Only avail ITC. So re-availment, there is no time limit. You can again re-avail ITC as a recipient if supplier has filed 3B subsequent to your reversal. So let me sum it up. First, when the transaction happens, supplier has filed GSTR1. Recipient has seen it in GSTR2B. Supplier did not file his 3B. Recipient claimed ITC in 3B. Now government is saying, I give you time limit till 30th September after the financial year. If by this date also supplier has still not filed that return, then you as a recipient will have to reverse ITC. And thereafter, if supplier files and pays, then recipient can re-avail ITC. The good part is interest will apply only after 30th November. Very important point. This can come as a case study based question. So this particular part, I would request you to pause the video and write it. Okay. Now let's have a look at the provision. Section 41, availment of ITC. Every registered person shall be entitled to avail the credit of eligible input tax as self-assessed in his return, and such amount shall be credited to his e-credit ledger, subject to conditions and restrictions as may be prescribed. So at present, self-assessed, you can avail ITC that point of time. The credit of input tax availed by the registered person in respect of such supplies of goods or services, the tax payable whereon has not been paid by supplier. So supplier has not paid the tax, shall be reversed along with interest by the said person in the manner as may be prescribed. Now let's see what is prescribed. Rule 37A prescribed that if the supplier has not filed 3B for the said tax period till 30th September following the financial year, in which ITC for such invoice or debit note has been availed, the recipient shall reverse ITC in 3B on or before 30th November following such financial year. Interest shall be payable if reversal is not done by 30th November. This is a good point. Where the said supplier makes the payment of tax in respect of the aforesaid supplies, the said registered person may re-avail the amount of credit reversed as may be prescribed. 37A has prescribed that recipient may re-avail ITC in his 3B after supplier furnishes 3B for the tax period. The moment supplier has furnished his 3B, recipient can now re-avail ITC, and for re-availment, time limit is never applicable. Clear? Okay. Now, the next is Rule 88C relating to returns chapter. Now, people, sometimes some registered persons may try to play with government. I will give you an example. See, this registered person has reported a sale of 100 in GSTR1. So output tax was 18 which he showed in GSTR1. Now you have to pay the taxes in 3B. He reported a sale of 10 rupees and paid output tax only of 1.8. Is he trying to play with government? Yes, because he is reporting more sales in GSTR1, but when it comes to paying those taxes, he is paying less tax. Now, in this case, government has now said that if there is a mismatch between GSTR1 and 3B, to a percentage as may be prescribed. Government is yet to prescribe a percentage when government officers will use this. But if there is a mismatch between 1 and 3B, then officer will issue a notice saying that there is a mismatch. Now when officer issues a notice that there is a mismatch, two options available. One, pay the tax along with interest. Second, reply within 7 working days that there is no tax payable. Now, if a person does not do any of these, then in that case, you will not be able to file GSTR1 for next tax period. Be very careful. This is the most important point. If for 1 month this is done and then a person receives a notice, he again does not reply, he does not pay the differential tax, then in that case he cannot file subsequent month GSTR1. And sir, if the reply is not satisfactory, you can continue with GSTR1, but officer will recover that amount. If the reply is not satisfactory, he can recover the amount, sir. Yes, but recovery provision you learn at CF final. So what does the law prescribe? If there is a mismatch between GSTR1 and 3B, a notice will be issued. You have two options: pay the liability or reply within 7 days. If you don't do these two, you will not be able to file subsequent GSTR1. If you do reply but it is not satisfactory, officer may recover such amount. Let's see. Manner of dealing with difference in liability reported in statement of outward supply. This is GSTR1, and in the return. This is GSTR3B. Let's see. If the tax payable by registered person as per GSTR1/IFF in respect of a tax period exceeds the amount of tax payable under 3B. So one you have reported more. By such percentage and such amount as may be recommended by GST Council. Till now nothing has been recommended. The said registered person shall be intimated in DRC 1B electronically on the common portal, and copy will also be sent to his email ID. The intimation will direct him to either pay the liability with interest through DRC 03, this is a separate form for payment, or explain the difference within 7 days. The registered person shall either pay the liability or furnish a reply on the common portal giving the reasons for difference. Where the amount is not paid or reply is not found to be acceptable, then the amount shall be recoverable under section 79. Section 79 you learn at final. What is section 79, sir? Recovery. Now what is most important is this one. This note can be asked as a case study question to you. Let's see. Note: a registered person to whom intimation has been issued on the common portal in respect of a tax period shall not be allowed to furnish details of outward supply under section 37 in GSTR1 or IFF for subsequent tax period. unless he has either deposited the amount specified in intimation or furnished a reply explaining the reasons of the amount not paid. So one of these two actions you have to do. If you don't do any of these two actions, then you will not be allowed to file GSTR1. See, there are already some cases where you cannot file GSTR1 for subsequent period. I'll give you those cases. 1. If you have not filed GSTR1 for May, you can't file it for June. Second, if you have not filed GSTR3B for May, you can't file GSTR1 of June. If you have not filed 3B for the quarter, if you are under QRMP, then you cannot file GSTR1 for next subsequent month. And last case which has now been added, if you have received an intimation of difference but you have still not paid it, not replied for it, then again GSTR1 cannot be filed. So 4 cases. 1. GSTR1 not filed. 3B not filed for previous month or previous quarter. Those are 2 cases. And last one which has been added now is received an intimation, did not pay, did not file a reply. Okay. Now coming to registration, is a small amendment. Deemed revocation of suspension if all pending returns are filed. Just think over. I did not file returns for 6 months. Now when I have not filed return for 6 months, officer issued me a show cause notice for suo motu cancellation. Now I will reply, then he will pass an order. All this will take time. In the meantime, my registration was suspended. Now I file all the returns. Cancellation has not yet happened. I have filed all the returns now. In that case, the question is whether in such a case suspension will be revoked. The answer is yes, because the notice was issued for non-filing of returns. The moment I have filed the returns, suspension will be revoked if I have filed the returns before cancellation. Sir, what if it is already cancelled? Then you have to apply for revocation of cancellation section 30. Let's see. Where the registration has been suspended for not filing return, suspended, and the registration has not already been cancelled. Oh, cancellation has not happened. The suspension of registration shall deem to be revoked upon furnishing of all the pending returns. If I filed all the pending returns, the suspension is deemed to be revoked. Okay. Now, there have been amendments with regard to registration procedure. First of all, see, PAN was being misused. There were a lot of cases where a person's PAN was being misused for taking fake GST registrations. Now to stop this, what government said is that once you enter the PAN on the common portal, the email ID and mobile number which you gave at the time of giving your PAN, that will be used. So whatever is available in CBDT database, Central Board of Direct Tax database, that email ID and mobile number will receive an OTP so that we can stop misuse of PAN. At present, this is not activated on the portal, but for your exams, it is activated. That means for your exams, PAN, once you enter, email ID and mobile number which is linked to the PAN will receive the OTP. Once you enter those OTPs, only then you can proceed to part B. That is amendment number 1. PAN, linked email and mobile number. Second amendment is relating to fake registrations. Now, system has been given an authority that if common portal finds that these are some risky cases based on risk analysis and other parameters, In such cases, common portal will direct the officer that this is a risky case. You please do a physical verification. Only then you grant registration. In such cases, 7 working days will get replaced by 30 days. See, already there were cases where 7 working days gets replaced by 30 days. First one was Aadhaar not opted for. Aadhaar authentication opted but did not complete within 15 days. Third one, proper officer deems it as a fit case to do physical verification before grant of registration. And now, if it is identified by the system, and once it is identified, again 7 working days will be replaced by 30 days. Plus, wherever system identifies it, the person will have to visit a facilitation center of GST. So there will be facilitation centers of GST where the person will go do a biometric Aadhaar authentication. There only he will do Aadhaar authentication in front of the officer or the person sitting in the facilitation center. Plus, he will show all the original documents of whatever he has uploaded on the portal. So just uploading on the portal will not give you registration if it is identified by common portal to be a risky case. Then you will have to take the documents to the facilitation center, show the original copy, then only the application is deemed to be filed. Now this has started only in Gujarat. No other state as of now has notified the provision. So throughout India, nowhere this provision has been activated except Gujarat. Institute has given it in statutory update, so we will have to read it. Let's have a look. PAN linked mobile number and email address fetched from CBDT database will be captured and recorded in form GST REG1, that is the registration application, and OTP based verification will be conducted at the time of registration on such PAN linked mobile number and email ID to restrict misuse of PAN by a person by unscrupulous elements, those fraudulent people, without knowledge of the said PAN holder. A pilot project is being conducted in Gujarat for biometric based Aadhaar authentication and risk based physical verification of registered applicants. Amendment to Rule 8 and 9 have been made to facilitate the same. This will help in tracking the menace of fake and fraudulent registration. Menace, there are a lot of people who are taking this fake and fraudulent registration, and government is losing money because they take fake registration, then they issue invoice, then they are not found. In order to improve registration process, biometric based Aadhaar authentication of high risk applicants. Who will identify it is a high risk applicant? Common portal. Who opt for authentication of Aadhaar has been introduced on pilot basis in Gujarat. The applicant who has opted for Aadhaar authentication and is identified on the common portal based on data analysis and risk parameters shall be followed by biometric based Aadhaar authentication and taking photograph of the applicant where the applicant is an individual or of such individuals, that is partner, karta, managing director, where the applicant is not an individual, authorized signatory, along with verification of original copy of the documents uploaded with the application at one of the notified facilitation centers. The applicant shall be deemed to be complete only after process is completed. That means at present you just file the application is complete, and thereafter you start counting 7 working days. But here application is deemed to be complete only when you have completed the biometric based Aadhaar authentication. Then deemed approval of registration, 7 working days replaced by 30. You know this, 1 point extra has been added, only Gujarat as of now, where applicant fails to undergo Aadhaar authentication or does not opt for Aadhaar authentication. Where PO deems it as a fit case to carry out physical verification, here Assistant Commissioner, Deputy Commissioner approval required. Where a person who has undergone Aadhaar authentication is identified on the common portal based on data analysis and risk parameters to carry out site verification. This is applicable only for Gujarat as of now, physical verification. Okay. Now the next point is relating to invoice chapter, very small point. See, e-invoice is applicable when aggregate turnover in any preceding financial year starting from 17-18 exceeds 10 crore. Now, there are some people where e-invoice is not required, like SEZ unit, government department, local authority, banks, insurance companies, GTA, passenger transport service, multiplex screen. For these cases, no need of e-invoice. Now, if their turnover is more than 10 crore and they are not issuing e-invoice, then they have to give this declaration. What is the declaration, sir? Let's see. I hereby declare that though our aggregate turnover in any preceding financial year is more than aggregate turnover notified under Rule 48, which is 10 crores, we are not required to prepare an invoice in terms of the said sub rule because we are exempted. So this declaration has to be there on the invoice. That's it, sir. Nothing. The declaration has to come on invoice. So government department invoice should have this declaration. Okay. Then invoice cum bill of supply. Now, invoice cum bill of supply is a specific document which came for reducing the compliance burden. If you are supplying both taxable goods as well as exempted goods, you could issue a invoice cum bill of supply. This was the reason for getting invoice cum bill of supply. And this document had a notwithstanding clause. It said notwithstanding any other rule. Notwithstanding any other rule could mean that it is not required to mention those details which are required on an invoice. Now government has clarified that invoice cum bill of supply will contain the same details as required in a tax invoice. So the details will be same in invoice as well as invoice cum bill of supply. In the industry we were already following it, but now government has cleared the lacuna. There was one place where it was not mentioned correctly and that has been corrected. Okay. E-way bill, a very small amendment. Imitation jewelry, artificial jewelry. See, e-way bill had an or has an exemption that jewelry no need to generate e-way bill. Now, government has said jewelry except imitation jewelry. That means for imitation jewelry, e-way bill will be required. So, artificial jewelry, will e-way bill be required? The answer is yes, e-way bill will be required. But what about, sir, actual jewelry? Even today, no e-way bill for that. Okay, let's see. Rule 138 provides for cases where there is no need to generate e-way bill. The exemption is removed with regard to imitation jewelry and hence e-way bill will be required for imitation jewelry. Okay. Next two amendments are also very small. Now, you remember CIN? What is CIN, sir? Challan Identification Number. It is a 17-digit number which is generated on payment of a challan. And once this is communicated to the portal, the credit comes in your e-cash ledger. That is the whole scheme. So you pay the amount, CIN is generated, bank will communicate it to portal, portal will give you a credit in e-cash ledger. Now, sometimes due to system failure, bank was not able to communicate the CIN to portal. Then on the next day, based on RBI e-scroll, RBI maintains track of each payment made to government. So that e-scroll used to have an entry that this has not been credited to eCash. So using e-scroll, it used to get credited to the eCash of the registered person who has paid the amount in eCash. Now, this was being done from many years, but there was no provision for this. Now the provision has been added, but let me tell you, this was being done from the beginning only. Wherever CIN was not communicated, using this e-scroll, the money used to get credited to eCash ledger of the registered person. Now provision has been updated. Let's see. Where the bank fails to communicate details of CIN to the common portal, the eCash ledger may be updated on the basis of e-scroll of RBI in cases where details of said e-scroll are in conformity with the challan generated in form PMT06. Because you generate a challan, there you get a CPIN, common portal identification number. Okay. Now, government has given a benefit to the trade. They have rationalized the late fee for annual return. Sir, what was the late fee earlier? Late fee was 100 rupees per day or 0.25% of turnover, whichever is lower. This you know. Even today, for more than 20 crore person, it remains this. But government has given a benefit for up to 5 crore cases and 5 crore to 20 crore cases. For up to 5 crore, government has said 25 rupees or 0.02% of the turnover in a state, whichever is lower. I am talking about CGST, same will come in SGST. And if your turnover is more than 5 crore but up to 20 crore, then 50 rupees CGST and 0.02% CGST. So 0.02, 0.02 is same. Here if you see 25 and here it is 50. And anyways, more than 20 crore, no benefit has been given. So this is a case of no benefit. So the benefit is given only for up to 5 crore cases and more than 5 crore but up to 20 crores. Clear? Okay, great. Now we come to the last part, that is circulars. A very simple circulars issued on 4 matters. Let's have a look at the matters. First one, no claim bonus. What is this no claim bonus? I'll give you an example. Say suppose I take a vehicle insurance and the premium amount is 10,000. Now, last year, if I have not made any claim from that insurance company for my vehicle, then insurance companies give a no claim bonus discount. Say suppose that no claim bonus discount was 40%. So what I pay is 6,000. Now you know what was the question? Whether GST will apply on 10 or 6. 10 or 6. CBIC has clarified that it will apply on 6,000 only and not on entire 10,000. The logic is simple. It's equivalent to a discount which you are giving, and that discount is a pre-supply discount which will not be liable to GST. Okay. Then the second question was, now the person getting this no claim bonus, is he providing me a service of not claiming last year? Is it a supply for consideration and should GST apply on that? CBIC said no, there is no supply for consideration in such cases. GST will not apply on this 4,000 separately as well. First clarification, GST will apply only on 6,000. Second, the other person is not giving a supply to you of not claiming last year. GST will not be applicable on 4,000. GST will apply only on 6,000. This is the first clarification with regard to no claim bonus. Then another clarification is with regard to e-invoice. Again, very interesting. See, banks are not required to generate e-invoice. Correct, sir? Banks are not required to generate e-invoice. Now, what about banks selling gold coins or gold biscuits, that is gold bullion? What about those? Whether banks are required to generate e-invoice for sale of gold coin, silver coin, gold bullion, etc. CBIC has said that if banks are excluded, then they are excluded. Then for any transaction, they are not required to generate e-invoice. Imagine this for railways also. Railways, transportation of passengers. They are providing transportation of passengers. So railways is not required to generate e-invoice. What about railways transportation of goods? Should they generate e-invoice? The answer is no, because railways is excluded. So exclusion in e-invoice is entity wise. If the entire entity is not liable, then no need to generate e-invoice. Let's have a look. What is the taxability of no claim bonus allowed as deduction by insurance company from insurance premium? Let's see. No claim bonus is a permissible deduction under section 15 valuation, and GST shall be leviable on actual insurance premium amount payable by the policy holder. Further, it is clarified that there is no supply provided by the insured to the insurance company in the form of agreeing to an obligation to refrain from an act of lodging insurance claim during previous year, and no claim bonus cannot be a consideration for any supply provided by insured to insurance company. Obviously, people, it's not agreeing not to do something. I am agreeing not to claim so that I get a no claim bonus. There is no supply for consideration. Okay. Let's see. Whether the exemption from mandatory generation of e-invoice is available for entity as a whole or only for certain supplies made by the entity. Entire entity gets or only for certain supplies. Let's see. It is clarified that the said exemption from generation of e-invoice is for the entity as a whole and not restricted by the nature of supply made by entity. Good example given. Market is important. This can come in your exams. The banking company providing banking services may also be involved in making supply of some goods, including bullion, biscuits, gold biscuits. The said banking company is exempted from mandatory issuance of e-invoice for all supplies of goods or services, and thus issue of e-invoice is not required. Okay. Then the last circular. This is again exemption related and one part of valuation. Very easy. Think about it. Is GST applicable on accommodation services supplied by Air Force Mess to its personals? So, who is providing accommodation? Air Force Mess to its personals. Whether GST will be applicable? The answer is no, because any service by government enjoys a exemption. Only 4 services are taxable: Department of Post, transportation of goods or passengers, service in relation to aircraft or vessel, any service to a business entity. Only these 4 are taxable. All other services by government enjoys a exemption. Same thing is said here also, that by government, Air Force Mess is giving it to personals. Those personals or officers are not business entities. Exemption will be available. Let's see. Any service by government to any person other than business entity is exempt. Hence, accommodation service provided by Air Force mess or other similar mess such as Army, Navy, Parliament, Police Forces mess to their personals to any person other than business entity is covered by the exemption. No GST, sir? No. Okay. Last one, RuPay cards. Now, if a bank issues RuPay card, central government gives a subsidy in the form of incentive for using RuPay cards. The question is whether this subsidy received from government will it be liable to GST? Obvious answer. CBIC has clarified that this is a government subsidy and this incentive will not be liable to GST. You have learned this in valuation. Let's see. The service supplied by acquiring banks in the digital payment system in case transaction is through RuPay or Bhim UPI is same as service that they provide in case of transaction through other cards. The only difference is that consideration for such supply instead of being paid by merchant or user is paid by government in the form of incentive. However, it is not a consideration paid by government for any service supplied by acquiring bank to government. This incentive is in nature of subsidy directly linked and it will not form part of taxable value. Hence, it is not liable to GST. So, GST will not be applicable, sir? No, it will not be applicable. So, these were the amendments for November 23 Inter CA. Obviously, when you see the statutory update book, you will find that statutory update book has a lot of points. But please understand that statutory update book is covering amendments for last 1 year. May 23, there were many amendments which had taken place. So, all those May 23 amendments are also covered in statutory update. If you have not seen May 23 amendments, then you can watch that and you will be able to cover the entire statutory update. All the best. Take care.